Hi, welcome to this podcast where I'm going to look at trade receivable and trade payable budgets. Well, I'm going to focus on the trade receivable budgets because the differences between the two are actually quite limited. Trade receivable budget is used to help you to work out when you are going to receive the cash from your sales. There would be no point doing a trade receivable budget unless many of the customers were credit customers and therefore allowed to pay at a later date. So we know the sales, we need to know when the cash is coming in, and also it's useful to know how much money we are likely to be owed at the end of each month. We would need to do an adjustment for any expected discounts within it. So although we might have sold goods worth £100, if we're going to give a 5% discount, the cash when it's received is only going to be £95. It needs to take into account the payment terms given to customers. So although the most normal payment term is within 30 days or a month, so people normally pay in the following month, there are examples of companies that do give up to, at an extreme, 6 months worth of credit. It then allows projected cash flows as well to be adjusted for both bad debts and for discounts. Trade payables budget is very, very similar, but it's going to be used to work out when the actual cash is paid out for the purchases if we've got credit purchases. It's going to link the purchases budget and the cash budget together. Again, we would adjust it for discounts if we are expecting to receive discounts, and it makes allowance therefore for the payment terms that suppliers would normally be expected to give to the business. Quick example of how to do one. Well, here we've got a business. Business has given you the information on their monthly sales. It gives you the opening trade receivables, and it also gives you information, the fact they expect a 5% bad debt, and they also expect to allow a 10% discount. So what I'll do, I'll actually blank out the opening balances, because the first thing that we can do, which is quite straightforward, we can just put all of the credit sales into our budget, because the credit sales are the credit sales as given. Now, you'll normally be given previous month's credit sales or purchases, and the reason being is that the payments or receipts are going to be linked to the previous month's credit sales or purchases. We'll put the credit sales in because that's easy. Now, the next thing that we would do is to calculate the bad debts, and we need to do that because we only allow a discount on the money that's paid. So here we're expecting a 5% bad debt. It seems a little bit high, to be honest, but still I made up the numbers. So 5% of the 500 owed is 25. Okay. Then the receipts, well, they're going to be the receipts after the cash discount's taken off. So I need to do 500 take away 25. That gives me 475. And I'm going to give a 10% discount on that money. So the discount would be 47.50, and the total amount, therefore, that I'm actually going to receive in terms of cash is going to be £427.50. And to do that, I did 475 take away 475. I did the amount that's owing still after I've reduced the bad debt, and then I took out the discount that had been allowed. And you do to calculate your closing balance, although here it's very easy because it's just going to be the 800 of credit sales. But to calculate the closing balance, I add the credit sales onto the opening balance, take off the receipts, take off the bad debts, take off the discount allowed, and that will give me my closing balance. And as with all balances, my closing balance becomes my opening balance for the following month. I then go through the same process. So I expect a 10% bad debt. So that's 5% bad debt. So my bad debts are going to be 5% of 800, which becomes 40. The amount still owing to this business is now going to be 760. 10% of 760 is 76 for the discount, and then 760 take away 76, the amount of cash I expect to receive is 684. Calculate the closing balance, and then once you've done it a couple of times, you just carry on doing it for as many times as they ask you in the question. Discount received budget is very slightly different if you get asked to do one. Thing you will notice, you definitely won't be asked to include bad debts. It's very rare that they ask you to include the bad debts in a trade payable trade receivable budget. I should say trade payables budget. Okay, but we don't need bad debts in there because the company will know whether it's going to be going bankrupt or not. If it's going to go bankrupt, it won't pay any of the money out anyway. But we still might have the discount received. So the key thing to do before we work out the payments, we need to work out the discount received that are going to be given to the business in this period and subtract those from the amount of money. Okay, student question for you to have a go at. There is a trade receivable and a trade payable budget to do in there, and then come back and there's just a very short bit of theory. Okay, this theory really should be something that any student of mine certainly watching this should be aware of, because we talk about the idea of reducing bad debts at AS level, and that's quite a common question at AS. It may come up again at A2, just linked to credit control and a trade receivable budget. And obviously the things that you should include in there, things like taking references of customers. If customers have got a poor reference or a poor track record of payment, they should only be allowed cash sales. All customers should have limits for their credit. Offer cash discounts for prompt payment. That will reduce the amount of money that you receive, but it reduces the chance of bad debts and speeds up the flow of money into the company. Send out regular statements and invoices. Use of aged debtor schedules. That should help you to chase overdue payments. Charge interest on overdue amounts. Companies are legally entitled to do that, certainly in the UK. And ultimately, if you take people to court, you get a reputation for chasing, and therefore people are more likely to pay you. Thank you very much for your time. Have a great day. And if you're one of my students, obviously email me.